space believe we'll get there in just a few years, as soon as the 2030s.
We know bankers' bonuses will be down. That expectation has been managed, but Bloomberg has now learned that Credit Suisse may cut its 2022 bonus pool by half. And Romain, this is on top of a 32% drop in compensation last year. Obviously, Credit Suisse has its own issues, and it's not the rest of the industry, but it's another piece of bad news for anyone still in finance.
Yeah, and of course, I mean, we always say, just as outside observers, you sort of wonder what this does for recruitment and retention, of course, because there's always so much competition out there for talent in the finance space. And if you can't pay up, particularly relative to your other competitors, then you know what.
How's Credit Suisse going to come back if it doesn't have the talent to do so, right?
Absolutely. We'll be back in a moment. This is Bloomberg.
The health monitoring module gives the dairyman a list of cows that could be an issue with.
Hey everybody, welcome to Trading Capital's second half of the live day trading room. So just to wrap things up, as we have roughly a half an hour, 33 minutes left in the trading session. The S&P 500 has had a float pretty much all day long, and this is due to the volume. If you look at this anemic volume, this volume represents, it's probably going to be the lightest day of this year, and even rivaling some of those days in 2022 minus this little session over here. So with light volume, the markets are favored to go up. The S&P looks like it wants to hit the 200-day moving average to potentially fill this gap fill, so you could have an initial pop-off CPI. Now if we flip to the intraday chart, we are seeing a little bit of late day selling here, but nothing too concerning. We did cover and get out of our Boyle trade for a lovely 50 cents, so that was our second winner of the day. We won Newmont earlier this morning, as well as Boyle for a lovely 50-cent gain on that trade. Now we are stuck in UAL, but I am going to hold this short overnight, as well as the Pinterest short I will be holding overnight into the CPI. It is a little bit more risky, so I understand if you want to cover it for a loss, but I am comfortable holding it in at these levels at this point in time. So in terms of what's up today, energy is up, natural gas is up after seeing a washout low. You do have strength in oil as well, and some of the energy stocks, but you're seeing yields collapse again, falling sharply, so that could be a positive sign for the bond market. Short term, that may be positive for stocks, but needless to say, we certainly, once yields continue breaking key levels, that becomes more of a negative headwind for stocks. So just as we wrap up things here, there's nothing too much going on. I don't expect any trades to be coming into the picture. Taking a look at Pinterest, we are still out of the money on this trade, but again, it's had an exceptional move off the lows. The same thing with UAL, which is coming in slightly, but just keeping an eye on the S&P 500. Obviously, anything could happen tomorrow in terms of CPI. The overall market sentiment for CPI is bullish. Most people are expecting a much lower number. I've even heard calls in the 6% mark. But essentially across the mainstream news networks like CNBC, Bloomberg, they are all turning bullish again on tech, as they do think that we are in for a soft landing. In terms of myself, I'm still seeing accumulation patterns occurring on the UUP. So I still think that we could see a dollar pop in the short term if something else comes to fruition. Simply looking at some of these sell-offs, again, you can see the big volume influx on this little mini candle here. What that's telling me is, although there were a lot of sellers coming into the pressure off of this down move, there were also buyers picking up the slack. So it'll be interesting to see if we get a pop in the dollar. That's how we are more positioned at this point in time. Couple news headlines that I'll bring to your attention. We had BlackRock, which is the largest fund in the world, announce 500 layoffs. So that's a little bit of a sentiment gauge for that company. Meme stocks are also seeing basically a day 2 and day 3 of significant money flows, inflows. Typically that means that retail's chasing this market move higher. That's usually a signal of a near-term top. China reopening could also be inflationary, causing inflation to come in higher than expected. And right now there's an article and a chart on Bloomberg. The market currently is seeing inflation at 2% in June. I think that's a pipe dream, in my opinion, but I could be wrong. And then also from the Bank of Sweden, the Central Bank of Sweden reports a net loss of 7.72 billion in 2022. So that's interesting. UAL is coming in a little bit. Pins is just hovering. So the SPY is coming in a little bit. Late day selling potentially occurring. We'll just have to monitor that. There are many stocks as we head into the CPI that have hit major technical resistance, which does favor a pullback in the short term based off of the technical resistance that many of the indices have even hit. We're clearly should be into some good technical levels that could bode well for potential market sell-off into CPI. But extremely light volume today and yesterday, which means that this bullish move up over the last 2 days should not really have much weight in the grand scheme of things because of the light volume trends. Let's just flip to the spider hourly. Spider hourly is holding up fairly well. Even if we look at the QQQ daily chart, I'll pull that up in a second. You can see the QQQ's bubbling up to that 50-day resistance. So that's a decent amount of resistance. Perhaps there's a slight bit of more upside if you come into these major pivot lows over here. This was your point in the breakdown pattern, but nonetheless, some short-term resistance on the Qs is being tagged as we speak. It'll be interesting to see if the spiders close back under this red trend line. The dollar is catching a little bit of a bid late into the session. So if we review some of the biggest movers on the day, again, like I said, a lot of the meme stocks like Carvana, Bed Bath Beyond, AMC, all seeing substantial money flows. In terms of sectors that are up on the day, All sectors are green except for consumer staples. XLP, the largest sector up on the day, is real estate, XLRE. That's probably due to the fact that yields are starting to collapse. If we take a look at some of these sectors, like XLRE, look at that powerful move on XLRE. Exceptional price action. Taking a look at staples, they're slightly negative. Utilities are up. Healthcare's been weak. Healthcare's still putting in this bearish pattern over here. Watch for healthcare for a potential breakdown because that is the second largest weighting in the S&P. I've been hammering and hammering on that all week. Taking a look at XLK, which is technology. You can see technology is hitting that resistance as well, that little bit of reversal candle resistance. And when you look at the volume trends, this hammer candle, this little bit of a reversal signal, had way more volume on the XLK versus what you're going into today. Extremely light. So you are seeing a little bit of a sell-off take place in the S&P 500 right now, but nothing too crazy. Nothing too crazy. The dollar's catching a slight little bid. Let's take a look to see how Tesla is holding up today. Let's flip to the Tesla daily. So Tesla's a little bit tricky right now because you've had a significant move off the lows, but one could argue that this is potentially bearish consolidation occurring on Tesla. Now, frankly, if Tesla breaks the 100 level, it does have a substantial amount of downside ahead, which would actually be a gift of an opportunity. I still think long term, if this bear market goes where I think it goes, I think we can see Tesla at a $63 stock before it has a really significant bounce. And then you never know. I mean, the way some stocks have basically wiped out all the QE, you would say I'm nuts, but that COVID low would mean that all that stimmy money is finally wiped out of Tesla. But that's a long way off. We will have bounces and tradable opportunities ahead. So the SPY is getting a late day sell. You're seeing it potentially close below that little daily trend line of resistance. We still have about 20 minutes left. But nothing too crazy. Just some late day profit taking in the market. So tonight after the bell we have KB Homes reporting. KB Homes. I guess I'll just type in KBH. This stock is into a ton of resistance. It's had a phenomenal move. But you can see this technical gap fill that it just filled, as well as it has retraced a decent level. Take the COVID low trend line. You can see that there may be potentially a little bit more upside on KB to about this 37.50 range, but nonetheless it is extended. Let's just take a look at the heat map today in a second. I'll bring that up in a few minutes. Okay, you should have it up on your screen now. So the spiders are still coming in slightly. Nothing really crazy, just a little bit of profit taking most likely occurring. But the heat map clearly shows a pretty strong day across the board for all the mega caps. This market was lifted by Amazon, up 5.54%. You also have Apple leading the charge, Google as well, Microsoft, so all the big boys, Eli Lilly, JP Morgan, Exxon, United Health, so all the major mega cap stocks are up on the session. Spiders are still coming in slightly. Let's take a look at Bitcoin. Bitcoin's putting in a little bit of a slight reversal. Even on the hourly, it's looking to come in. There's so many stocks in this market that are crazy extended that I personally would not be buying. Even if we get a good CPI print, I would not be buying them long at these levels. If we flip over to Bed Bath & Beyond or Bloomberg, you can clearly see they're discussing some of these meme stocks.
Now is meme stock aficionado and Bloomberg News reporter Bailey Lipschultz to talk a little bit more about this. This is insane to me. First, I noticed this yesterday because we saw like Party City, which like doubled in price for no particular reason. And I think even today it was up like 30-something% before it fell back down. I'm always loath to ask this question, but what is driving this?
There's no fundamental reasoning. It could be kind of a confluence of short covering. It could be investors wanting to generate alpha ahead of CPI tomorrow. Maybe people are bored. Just simply Wall Street dashing in and out of some of these stocks. Looking at it from a retail perspective, we're not seeing demand like we saw back in January 2021. We're not seeing short-dated, out-of-the-money call options trading. So fundamentally, nothing has changed. And also fundamentally, it does not appear to be driven by the so-called Reddit raiders or retail crowd.
Interesting.
But these names are the familiar ones from January 2021. AMC Entertainment, GameStop, Bed Bath & Beyond. Have there been any new additions to the meme stock world? What makes a meme stock?
It's a question I get all the time.
Seeing a little bit of late day sell pressure coming in. UAL's not really seeing any pressure. SPY's catching a little bit of a bid here. Can take a look at the IWM, which is the Russell 2000. This gives a good broad sense of the overall economy. So once again, bubbling up on that 200 moving average. Let's see what type of resistance we have. Every time there's a little bit of selling, buyers just come right back in. That's due to the light volume nature. It's probably the lightest volume day of 2022, which was followed by an extremely light volume session yesterday. So this little bit of a float over the past 2 days makes me a little bit more skeptical of the CPI report Had we sold off initially into the CPI, would have mostly expected maybe a better than expected reading. But the fact that we are rallying into the CPI really takes some of that risk to reward out of the market. So if you look at the rally in the last 2 days that the Spiders has done into the CPI report, it's been a pretty decent one. Basically off of this support, in the last 2 days, the S&P has rallied about 2.2%. And if you read JP Morgan's inflation expectations or trading game plan, they're expecting, if the CPI comes in soft, probably a move of 1.5 to 3% to the upside, but if it comes in worse than expected, then most likely a move of 1.5 to 3% to the downside. So it's roughly about a 6% trading range that they're expecting. If we had to do a 3% upside, takes us right to about there. And if we had to do 3% to the downside from current levels, take us there. So you have about a 6% trading range that is expected off of the CPI tomorrow. And let's not forget, we also have initial job loss claims, so those are interest rate sensitive. The market expectations, let me just pull that up. So obviously inflation, market expectations, and consensus is to come in at 6.5%. Currently we're at 7.1, so it would be a 0.6% drop month over month. And initial job loss claims consensus is 215,000. So if we come in anything less, that certainly isn't good for interest rates, yields, and the Fed, considering they look heavily at the labor market and they want it to soften up. So the Spiders are making a late day push here. Late day push. Spiders are remaining strong near the end of the day. We have 13 minutes left, and you are getting a little bit of a late day push on the S&P 500. Let's take a look at pins. UAL, Bitcoin, UNG has put in a beautiful bottoming tail on the daily chart, so it likely means that there's further upside. Full disclosure, we are long UNG. We are long UNG. So look at that nice little bottoming tail on volume. If we pull up the actual underlying commodity, natural gas, you can see the support levels that we're trading at on natural gas. Major pivot zone, this little pivot zone, oversold condition. It looks to be that you've completed a measured move as well. I'd have to do the math on that, but it's looking very, very likely. So markets are pushing up late into the session here. SPY is trying to push for the highs. The Spiders are trying to push. And that strength is coming from mega cap tech, mainly mega cap tech. Pinterest is still coming down despite the Spiders pushing up, so a little bit of a bearish divergence on Pinterest part. Microsoft's continuing to push up. Spiders, big push. Here we go. They're trying to close this positive into the end of the session. And that's the light volume. Still taking into account we're probably going to do under 50 million shares today. We're at about 51 million, sorry. Let's just tune you into Bloomberg, see what they have to say.
To the close, 39.60 and change right now on an S&P 500 with 10 of the 11 sectors higher. Kind of interesting here, second best performer on a sector basis belongs to discretionary name, Scarlett, but the best performer on the day belongs to real estate. And kind of interesting that a lot of the rate-sensitive sectors getting bid here ahead of a big CPI report just a few hours away.
Yeah, and the thinking here is that CPI will continue to come in tamer as it has been over the last 2 months. You do wonder, however, whether we're going to get a situation where good economic news generates a good market reaction. In the past, bad economic news is good news for the market. This time, we're doing a lot of front running at the moment, right?
Yeah.
Okay, so for more market analysis, let's welcome George Maris, co-head of Equities Americas at Janus Henderson Investors. George, it's really good to speak with you. I think the key question this year is we know inflation is moderating, it's coming down. The key is how far and how fast. Judging by the kind of market run-up we're seeing right now, what are investors betting?
You know, I think investors are betting for a very rapid deceleration in inflation. I think that's likely to happen. I think we're going to see a lot, you know, the headline compares are going to dramatically decline. And I think a lot of that is certainly being embedded in forward expectations. We're going to see that throughout the year. Things will get better from an inflationary standpoint. But I would caution everybody that that is going to be highly transient, and it's masking some very sticky underlying trends that are going to be propelling inflation, certainly for the medium to long term.
So what are we talking about? Is that just housing, or is there something else, George, that you think is going to have that stickiness?
You know, I think, in fact, I think housing will actually start to roll over as we get contemporaneous data. I think what's actually going to be sticky are some structural elements. What's going to be sticky is, one, the deglobalization that we're seeing. The bringing onshoring of all manufacturing is just going to make things more expensive across the entire manufacturing supply side of the global economy. I think a lot of regulation, a lot of it being ESG related, a lot of this trying to clean up the world and make the world a better, safer place, will be inflationary. It adds costs without increasing productivity. We're also seeing demographic trends throughout many of the world's biggest labor forces, whether they're in the US, Europe, even in China and Japan. We're seeing the demographics where folks are retiring at a faster rate than people are backfilling those roles, creating wage pressures going forward. So there's multiple structural elements here, including, never mind, just-in-time manufacturing going away, given some of the supply disruptions we saw with COVID and Ukraine.
To a new high late in the session. Interesting thing is that PINS is still selling off, as well as UAL, despite the S&P making new high. We're really only seeing the money rotate into the big mega cap names, like Microsoft is crushing it. You have Amazon pushing for new. So it's all the big cap tech names. Apple's trying to push for a new high, but just shy of it. So it's really just a rotational trade, and you're seeing the SPY rally because of the mega caps rallying. So short-term positive, these are still selling off as the SPY is making new intraday highs. So what that tells me is that if we do get a down day in the SPY, these stocks will likely see further downside. But the spiders are just floating up on that light volume. The SMH is going to tag a key technical gap fill very shortly. Spiders are at new highs. 395 was tagged. Looks like they're going to give us a good close here, unless something drastic happens in the last 5 minutes. So the Dow is up 0.66. You are seeing weakness in some of the big Dow components like McDonald's, Coke, and CAT. CAT did rally substantially off the lows, but one of the reasons the Dow is up is because of Apple's market weighting alone. So new highs on Microsoft. Wow, look at this late day push. Pushing up on Microsoft. Microsoft just got a huge pop. new high, Apple new high, Spiders new high. SMH just filled the technical gap. Just around 55 million shares on the SPY being traded. Spiders is pushing much higher, led by, again, big cap tech. Spiders are tagging a decent level of resistance as well. I do have this level over here as resistance that we just tagged, and actually I will do a little bit of a channel analysis for the SPY. Which you can see we just tagged there right now. So you can clearly see the Spiders is tagging that resistance channel at the top of the range, the high end of the range, going into the CPI, leaving everyone on a bullish note. The big question is, what will the CPI do? Expect a big move tomorrow. Either way, we should get a big market reaction. But again, the fact that we've rallied over 2%, 2.5% into the CPI reading limits that risk to reward ratio, in the sense that there's now more market risk, being the fact that we're at the top of the range, we've rallied off the lows, and all of this upside has now been eaten out. So there's now bigger expectations for the CPI to come in better. And when there's much more expectations on the line, that leaves the risk to potentially a downside move. DXY, the DXY is catching a little bit of a bid late in the session as well, and that's really interesting because the SPY is still rallying. So it's very rare you see the SPY rally with the DXY. You're putting in a little bit of a maybe mini bull flag pattern here. And the interesting thing about the DXY is this was your major pivot high over here. And I'll just show you the breakout line, which we have been holding. So this was your original breakout, which you actually did confirm, but then you basically made a bear flag, came down, recaptured, fell, broke the line, held this major upsloping channel. Now you've recaptured and broke out of the same downsloping trend line. So in my mind, it does favor move up in the dollar to continue, but we're seeing a big market push right now in a variety of names. Microsoft, Apple, mainly the big cap tech. Looking at the SPY, massive run up late into the session. Simultaneously, you see the same move on the dollar, which is very intriguing to me. Very intriguing.
Continue to sort of persist and strengthen.
Gold looks to be putting in a doji candle on the daily. It is substantially off the lows, but nonetheless a doji candle at resistance is good to see. Beautiful trend line that is, into a massive wide range red bar over here. You can see that was your initial break and sell off, and you're back trading at that level. So the Spiders are even pushing even higher now. Microsoft surging. So again, good for our pin trade that it hasn't really rallied despite the SPY making a big push from the low to the high here. And the S&P is still going. Yields are starting to collapse. The 10-year today is down 2.46%. The 20-year is down 2.3%. And the 2-year is down 0.8%. Big push continuing on the S&P 500 here. Big push. And that is the market session. Markets have closed. The S&P is up on the day, up 1.26%. Just flipping to the daily chart, we can see that the S&P is at resistance inside of this channel.
By about 1.3%. We should point
Potentially it could confirm a breakout above this trend line. That would be extremely bullish in the short term for the markets. But nonetheless, a great rally day for the markets on light volume. So again, the fact that we've had declining volume trends despite the markets floating up, what that tells me is we have a negative trend divergence. Volume to trend divergence is typically more of a bearish signal, especially when the major trend of the market is down. So really that sums it up for the live stream. Congrats on the 2 trades. We're still holding the 2 others overnight, short UAL and short pins. But other than that, congrats on the 2 winners from this morning, Newmont and Boyle. But other than that, I will bid you farewell and stay tuned for our live market stream tomorrow morning. CPI comes out at 8:30. Initial jobs claims come out at 8:30. So we will be starting early with our market stream. Other than that, take care everybody, and we'll see you